Hey everyone, welcome to another video by Optionables. My name is Saket, and in this video, as usual, we are going to discuss about the market summary. We are also going to discuss what happened to Adani Group stocks. Why exactly did they end up falling 20%? I know the news is going around everywhere, so we are going to try to summarize the entire thing and tell you the crux of it. And next, moving forward, we are also going to discuss about the performance. So how was our performance this week? Which was the easiest day to trade and which was the hardest day to trade? And finally, we are also going to look at the market outlook for next week. So what are we expecting for next week after this big fall which we have seen in the market this week? Before moving on to the video, I would like to tell you about two things. First thing is, on 26th of January, we launched Target on the account of Republic Day, and we got excellent response, close to around 1800 registrations just in matter of 2 days. First of all, I would like to thank you all for showing such good support for our product. So I will be attaching a promo video link in the description below. So in case if you haven't checked it out, you can check out the promo link and register to start using Target for free. And finally, if you are not aware, we are also regularly putting up Hindi videos on our Hindi YouTube channel. So we'll be covering the expiry day outlook, which will be coming on every Wednesday, and in the weekend we'll be putting a video on price action series. So in case if you haven't checked that out, so again we'll be attaching the link in the description, so do not forget to check that out as well. Now we'll be quickly moving on to the first part, which is the market summary. First, we'll be discussing about the market summary. So if you look at the markets this week, both Nifty and Bank Nifty ended up cracking a lot. Nifty fell close to around 2.5% and Bank Nifty fell almost around 5%. And the main reason why the banking sector fell is because of the Adani stocks. So if we actually look at the top losers in Nifty, it is first the Adani Group shares, that is Adani Enterprises and Adani Ports, and then you have the top banks in India, that is SBI, ICICI, Axis, everything ended up cracking. So we are going to understand why this happened more later on. So we are also going to look at what actually held Nifty. So in spite of Bank Nifty and Fin Nifty falling 5%, Nifty only fell 2.5%. What was that supported Nifty and made Nifty fall less? So thanks to IT stocks, auto stocks and FMCG stocks, Nifty didn't fall as much as Bank Nifty. So IT stocks actually supported Nifty. On the other hand, if you look at the auto stocks, all of the auto stocks ended up gaining. So if you see Bajaj Auto and Tata Motors, each of them went up almost around 10%. On the other hand, Maruti also did really well. Mahindra also supported the market. So overall, auto sector did really well. On the other hand, banking sector did really badly. FMCG and IT did give some support to the market. So if you see who ended up selling so much, it is the FIIs who sold almost around 11,000 crores this week alone. So all the 5 days they ended up selling, and especially on the 5th day they ended up selling close to around 6,000 crores. 5th day is the Friday when we actually saw the market crack a lot. So they ended up selling close to around 6,000 crores. On the other hand, DIS also did end up buying on all the 5 days, but the buy figure of DIS was not enough to support the selling by FIIs. So DIS ended up buying somewhere around 8,000 to 9,000 crores, whereas FIIs had sold around 11,000 crores. So because of this fall in Nifty and Bank Nifty, both Nifty and Bank Nifty ended up breaking their important support levels. And for Nifty it was 17,750 and for Bank Nifty it was 41,700. So we had discussed about this in the previous week videos as well, and finally they ended up breaking on the lower end and the markets ended up cracking further from there. Given that the global cues are extremely positive, if you look at the US markets, almost every single day it is going up higher. And on the other hand, we also have the budget coming this week on February 1st, which is Wednesday. So given all these factors, hopefully we might find the bottom somewhere soon and start heading upside. So if you look at the broader outlook, I am bullish for the medium term. So I wouldn't mind shorting a 18,000 March end put, because I feel that post budget, because the global cues are so positive, we might see a turnaround in the market. This is just an expectation what we are having. We might end up shorting 18,000 put options of March end if the market falls further from here. Now we'll end up moving on to the second part, what happened to the Adani Group stocks and why they ended up cracking so much, and also what was the impact on bank and why the bank stocks also ended up falling. So now we are going to discuss what happened to the Adani Group stocks. If you actually look at it, Adani Group stocks ended up falling around 20%. Each of the major 7 stocks of Adani ended up cracking around 20% on Friday. So what exactly happened and why did they crack is because of a report by Hindenburg accusing Adani of fraud. So this firm told that Adani is actually doing market manipulation or artificially inflating the prices. So they have in their report asked 88 questions to Adani. So they have openly asked questions to Adani. They have accused him of not just market manipulation but also a lot more things. So I would request you to give a detailed reading of that report. It is almost around 110-page report with around 32,000 plus words. So here I'll just try to summarize the entire thing. We'll also end up making a detailed video on the same soon, but I'll just give a brief summary in this video. So in India, there is a rule that you can't have more than 75% promoter holding in any publicly traded company. That means any company you take, TCS, Infosys, anything for that matter, if it is publicly listed, the promoter cannot have more than 75% in that company. As per the norms, even Adani does not have more than 75% in the Adani Group stocks. But the thing is, Adani has opened a lot of shell companies in various places like Cayman Islands, Mauritius to buy and inflate Adani Group stocks. So for example, they give a detailed reading in the report where they say Adani himself through these different shell companies own close to around 85 to 90% of the Adani Group stocks. That means there is only 10% left in the market and 90% is held by Adani himself through various other investment routes. So now you can see what exactly ends up happening. So if 90% is held by the promoter himself, there is only 10% of shares left in the market. That means there is very little shares or very little supply of Adani shares left in the market. Now, if there is a huge buy order being placed by the promoter himself through various shell companies, that is artificially going to increase the demand and also increase the share price of the stock. So they give a detailed report, also a detailed investigation of how they found out that most of the Adani Group stocks are held by Adani himself through various shell companies. This is just one part of the finding. So now the thing is, they also accuse him of a lot of fraud, financial fraud happening within the firm. They tell they have appointed a chartered accounting firm which is just around 11-member team auditing $100 billion firm with no experienced CA. So this is quite suspicious obviously because they haven't appointed any big firms like Deloitte or PwC or KPMG. Instead they have appointed a very small firm to audit it. And one more thing is they also talk about how heavily they are leveraged. So Adani Group has a total leverage of almost around 2.2 lakh crore, but they do not have enough cash flow to support it. Most of their businesses are loss making. If you take Adani Green, Adani Power, most of them are loss making. So there are only 2 or 3 cash rich businesses which Adani has, but they are over leveraged. So what is the problem of being over leveraged? The thing is, Adani has actually pledged his own shares to take more loan. So to understand this, I will give you a simple example. Let's say I am the owner of Adani Enterprises. So I will inflate the Adani Enterprises share price. So now totally Adani Enterprises is worth 4 lakh crore in the open market. So if Adani Enterprises stocks is worth 4 lakh crore in the open market, I will go to the bank and tell that take my shares as a pledge and give me money. So when you are giving assets worth 4 lakh crore, obviously the bank will end up giving you some money. So this way, Adani has pledged his own shares to actually go and borrow money from the bank. This is all okay if the share price remains to be on the higher level. But if the share price starts to crack, then the value of the collateral what he has given to bank starts to come down. And this is a huge risk for the bank because if they have lent out almost 2.2 lakh crore and if Adani starts to default on the bank loans, then they have to take it on their books. So they can't obviously pass it on to customers and tell that we can't give back your deposits. So that means the banks, whatever net profit they have made over the years, so all that will be wiped off. This is just a worst case scenario where Adani won't be able to repay his debt, and most likely this won't end up happening since banks are heavily exposed to Adani Group companies where they have ended up giving a lot of loans. So that's the reason they are scared because of this financial fraud coming out. They are scared that if the Adani Group stock falls and the loans are not repaid, then they have to take the losses, and that's the reason Bank Nifty is cracking. So this is just a brief summary, and we are going to discuss more about this in a detailed video which will be coming out soon. So now we'll move on to the next part, that is the weekly performance of optionables. If you look at our performance this week we ended up with a loss of around 5 lakh rupees. And the reason behind this was quite simple. We had lot of long positions in Nifty and Bank Nifty futures, and as you all know, both Nifty and Bank Nifty futures ended up falling. So the thing is, on Monday we had a fantastic day because the markets had gone up and we made close to around 14 lakh profit. And finally on Wednesday, when Nifty and Bank Nifty both ended up cracking, so we lost around 17 lakh on that particular day alone. And even on Tuesday also we had lost some amount because the futures had fallen, and overall we ended up losing around 5 lakh. But if you look at one more thing, on all the days, that is Monday, Tuesday, Wednesday, Thursday was a holiday, and on Friday we ended up making profit with the option trades. Only with the future trades we ended up losing, but we actually end up making profit with the option trades. So I would say this is something which couldn't actually be avoided because the markets fell and we lost from futures. So apart from that, the trading really did go well this week. So on all the days we ended up making money, be it expiry of FinNifty, expiry of Nifty and Bank Nifty, or on the other days, that is Friday when the market was falling, we had call option short. So overall it was quite easy to trade this week. We went light on positions and we felt it was easier to trade this week. So right now we have cut all of our positions and we are just long in one particular stock, that is M&M. So we are having M&M futures long. Apart from that, everything has been cut out. So given that the budget is coming next week, so I can't give a lot of market outlook till the budget actually comes. The market can end up moving anywhere, but I'll be giving you important key levels to watch out for. In case if we break that level, we can end up going long. Since budget is there this week, I can't give you the important levels because in case the market might break that level, and if the budget is really good, it can just turn around. So I would be light on positions till the budget is over, and I would also recommend you to stay light on positions till the budget is over. Once it is over, we'll get a clear direction for the market. So in this budget, there's a lot of expectation regarding the long-term capital gains, whether they are going to make a standard long-term capital gains or how exactly they are going to treat it. So there's a lot of speculation regarding that. Once clarity comes on that, it is going to be good for the investors. So what I am going to rather discuss is what we are going to do with the Mahindra trade what we have. So till budget is over, we won't be taking any trades, and if in case the budget is good or the market ends up cracking post the budget, we might end up shorting the March end 18,000 puts, as I already told you in the first part. So now I'll be quickly moving on to the screen recording where I will show you our Mahindra trade, why exactly we are holding it, when exactly we want to book it, and also when exactly we'll book a loss if something goes wrong. So with this, now we'll be quickly moving on to the screen recording. If you are liking the content, do not forget to hit the like button, share this video, and subscribe to Optionables. So first we'll start off by looking at the Bank Nifty chart. So when you actually look at this level of 41,700 is a very crucial level for Bank Nifty. Multiple times it had faced resistance here before, and later this level also turned out to be a very good support for Bank Nifty. But yesterday, that is on Friday, Bank Nifty not just opened with a gap down and broke this level, but also continued falling further, and it has right now come around 40,300 levels. So if you actually look at the Bank Nifty, the structure itself is quite bearish. So as I told you, I won't be giving a lot of outlook for this week because there is budget. Even if we look at the open interest, it does suggest a lot of bearishness. Extreme call rating at 41,000, 41,500. So there is a lot of call writers, but all this can very quickly change post budget. So when we look at the chart on a broader perspective, you see that the next important support is somewhere around 39,700. So this will be the broader range where we can expect Bank Nifty to trade. That is 39,700 to 41,700. That is around 2,000 point range. And this is also a very important range and any side it breaks from here, either on the higher side or on the lower side, we can definitely expect a one-way move in Bank Nifty. If it is breaking 41,700, then definitely we are going to expect a move towards 43,000. Or in case if it is breaking 39,700, then very likely we are going to see 38,000. So this is the range, but we are expecting Bank Nifty to trade, and it might surely break out on one side very soon because of the budget. So when we look at Nifty on a similar sense, so you do see this level of 17,750 has acted as a very good support for Nifty couple of times. So right over here, right over here. So almost for close to around 1.5, 2 months, this acted as a very good support. So in Nifty, unlike Bank Nifty, we opened above the support, but we have closed decisively below the support. So again, considering where is the next support that is coming for Nifty, that is going to be somewhere around 17,300. So this is the range where we can expect Nifty to find some kind of support. So given this broader range of 17,300 to 17,750, we can still expect Nifty to trade in this range. And in case if the range gets broken on any one side, so let's say it gets broken on the higher end, we can definitely expect a rally towards 18,100. If it gets broken on the lower end, we can surely expect market to retest 17,000 or even 16,900. So this is the broader outlook for both the markets, that is Nifty, both the indices, that is both Nifty and Bank Nifty. And any side the range gets broken, it is quite interesting to see how exactly market would react from there. So let me just quickly come to my trade. So right over here, you can see that we are holding Mahindra and Mahindra futures, and also we are holding Fin Nifty call short, just around 1,000 quantity. It is not going to make much of a difference. So we have sold around 40, and right now it is trading around 20. The reason why we took Fin Nifty is because the expiry will happen before the budget. So it is going to expire on Tuesday and the budget is on Wednesday. So thereby we have some good room to play around with Fin Nifty rather than playing with Nifty or Bank Nifty. So I would ask you not to really look at the M2M or the prices. So there is a mock trading going on Firstock. So that's the reason the prices are totally different. But one thing, what you are going to see here is we have 21,000 quantity long in Mahindra and Mahindra futures. So I'm going to tell you the logic or where exactly we plan to exit it also. So the reason why we have entered Mahindra and Mahindra is fairly simple. That is because all the auto stocks have performed really well, and relatively Mahindra and Mahindra is very strong. So if you see last 6 months or 1 year chart of any auto stock, M&M is relatively extremely strong, and the results of M&M is still not out. If you look at any other auto stock, the results have come out really well and the stock has almost gone 5-6% higher, but Mahindra's result is on February 10th, and that's the reason we have taken Mahindra and Mahindra right now. And not just that, why we are expecting the results to be good is the auto sales data of October, November, and December for Mahindra was very, very good. So, based on all of this, we are expecting the rally to continue in Mahindra. And there has been a long consolidation in Mahindra. So, if you look at from the month of August, right, from the month of August of 2022 up until now, Mahindra and Mahindra. So, if we have to pick a broader range, it is consolidating between 1200 to 1340. So any breakout on the higher end is definitely going to fuel a very good rally. So you can see this consolidation range, it is close to around 140 points. So in case if we decisively break above 1340, then definitely we can expect another 100 to 140 point rally on the higher side, which is going to take it to 1450 to 1500 levels. That is our expectation, what we have in Mahindra. Now coming to the stop loss, the thing is, if you look at Mahindra daily chart from almost beginning of Jan, it is consolidating within this box. So this lower end of this box is 1300 and the higher end of this box is 1340. So we have kept the lower end of this box as a stop loss. That is just 20-point stop loss. But you know what is the upside potential? We are aiming for at least around 100 to 120 points on the higher end. So that is the risk to reward of almost around 1 is to 6. So we are working with a 20-point stop loss on a closing basis. And on the higher end, we are expecting around 100 to 120 points which is almost 1:6 risk to reward. So this is a simple trade what we are holding in Mahindra. And given that the market has actually cracked in the previous 2 days, and in spite of that, Mahindra is holding out strong. That gives us more confidence that in case the market starts recovering, then we can see a fantastic rally in the auto sector. So this is the only logic why we are holding Mahindra as of now. So with this, we also come to the end of this video. So if you have liked this video, then do not forget to hit the like button, share this video, and subscribe to Optionables. And also one more thing. So here we are actually looking for the closing basis below 300. So yesterday it fell below 300, but it also recovered and closed at 1320. So thank you.